How does one minimize their tax bill? As a young person and a first-time business owner, there was a time that I didn't understand how the tax codes worked and how I can get them to work in my favor. I'd like to share some of what I've learned on this journey of understanding tax codes as an individual, also as a business owner. I'm going to be utilizing this book and going through it. It would be my main reference point. This book is a year-round tax saving plan and a personal business journal that has a very detailed year-round calendar for business owners to utilize to minimize their tax bill, amongst other things. The first thing I'm going to bring up is a year-round tax saving calendar that every business owner needs to implement in order to minimize their tax bill. And it's a year-round, continuous, meticulous record-keeping plan that is far better than last minute trying to grab all the documents together, put everything together. Transform your relationship with taxes from one that is based off of fear and reaction to one of foresight and confidence. By implementing systems and checklists, you simply can't go wrong. You'll be prepared for the tax season and minimize your tax bill in the process. The year-round strategy tax calendar, which is a detailed month-by-month, quarter-to-quarter guide on the actions that you need to be taking on a monthly basis to minimize your tax bill. And of course, this starts in January and ends in December because it's a year-round tax saving plan. Keep in mind that this is the same year-round tax saving plan that is utilized by many top business owners in order to minimize their tax bill, because they understand that tax season, you don't just prepare for tax season last minute, you prepare for tax season starting at the beginning of the year. And when tax season comes around, you don't have to guess how the turnout is going to be for you because you've been preparing and planning all year round, and you can actually maximize your deductions by doing this. The second thing we're going to talk about and go over is an actionable checklist for compliance, optimization, and documentation, making sure that business owners are actually utilizing all the opportunities to minimize their tax bill and take all the deductions that are available to them. Then we're going to talk about your entity store card and make sure that you as a business, you have the correct entity store card to succeed and your current entity structure isn't costing you money. And lastly, audit proofing fundamentals to make sure that you are minimizing likeliness or mitigating increased IRS scrutiny, making sure that you're keeping good records all year round of your business finances and keeping it separate from your personal so nothing is commingling, etc. So that's what we're going to be talking about today. So let's get into this video. I'm excited. Okay, so the first thing we're going to be talking about is the year-round tax saving plan calendar. The first thing I'm going to mention for businesses to take note, if you are a business owner that has a business, quarter one is a time where you are reviewing. It's like setup and review time period from January to March, whereas a business, you are reviewing last year's finances for your business and making sure that everything adds up, everything is good. You're preparing to file your taxes. You're wrapping up the prior year and basically preparing for the new one. You're auditing your expenses, reviewing your books, making sure that you are taking account or accounting for all of your major business expenses, and especially the little ones as well. Everything, you're accounting for all your business expenses, you're auditing them, making sure that everything looks good on paper. You're also analyzing your business's profitability, making sure that the price that you've set for your products in your particular business is a good price and it is actually working. You have a good profit margin and you're not losing too much money. Just making sure that everything is good. Ability. What went good, what went wrong, when were you making the most money throughout the year? At what price were you making the most money? Taking note of the information, everything that you're learning so that you can implement a new strategy the following year. This is also the time for you to look at your entity structure as you're reviewing and auditing your expenses and looking at your profitability, looking at your entity structure, making sure that this entity structure that I currently have is good for my business and it is not costing me money and it's enabling me to actually utilize all the deductions, and it is a tax strategy in and of itself. When tax season comes around, the entity structure that you have isn't costing you money during the tax season or preventing you from being able to save money as a business owner. Yes, make sure that you're establishing a meticulous record-keeping system. QuickBooks is able to track business finances. There's a ton of other softwares and stuff that you can implement to make sure that your transactions, every transaction for your business is being tracked and you are fully aware of what's going in, what's going out. And your business finances are not mixed with your personal finances. You have your personal bank account and then you have your business bank account, and they don't mix. Quarter two is a deferral and deduction deep dive, April to June. April 15 is a tax filing deadline for the US. And now as a business owner, your attention should be on leveraging your tax advantages. If you have a large enough business, you focus on funding tax advantage retirement plans. Contributing to these plans will significantly reduce your business's taxable income. It is a very powerful year-round tax saving strategy. If you are a solo or self-employed entrepreneur, this is the best time for you to get a 401k or solo 401k or SEPIRA. This is the best time for you to contribute to those retirement accounts and have it grow in a tax-deferred environment. And these plans, of course, allow for substantial annual contributions to save you money in the long run. At this time, Q2, you're aiming to maximize your contributions to reduce your AGI, your adjusted gross income. Number 5, leverage your mileage and vehicle deductions. Keep track if you have a business vehicle, or if you are a solo entrepreneur or a business owner that doesn't necessarily have a team. Something that you can utilize and maximize is your vehicle mileage and vehicle deductions. If you have a business vehicle, you can track the mileage on that vehicle, keep a very detailed log of the vehicle mileage, and then that can also be used as a tax deduction as well. There are also softwares that you can utilize in order to track the mileage, like QuickBooks. QuickBooks is a tool that also tracks the mileage for that. There's also something called a Mile IQ that you can use to track your vehicle mileage. If you've taken any flights or anything where you've had to travel for business purposes, this is also where you want to also document and keep a log and track all of those expenses for the tax season write-offs. Because many business owners lose thousands of dollars because they don't write down and keep track of their mileage that they've acquired because of business travels, business needs, etc. If you've flown on a plane, driven, whatever it is, whatever transportation method you use, make sure that you're keeping track of all the mileage. Q3, the mid-year checkup. Q3 is mid-year checkup and asset acquisition. This is from July to September, in the middle of the year. This is during the summer, and your focus is going to shift again. This is when you want to work with an accountant to see if you can estimate your gross income. You don't want to wait until the end of the year to see what your gross income is, to figure that all out. You want to have an accountant working with you, or sit down, look at your numbers, and try to estimate what your end of the year gross income is going to be. This is going to be your mid-year projection. This is extremely important for you to do because then you can identify gaps. If the projection shows high tax liability, this is the time for you. You have time. You have 3 months to implement a strategy in order to minimize your tax liabilities, like making additional contributions to your retirement savings accounts. Or you can accelerate expenses. This is the time frame in which you are basically preparing, really preparing for tax season, and you're not waiting last minute for anything. You are making estimates, you are making a plan, and you are basically setting yourself up to win. This is the time for you to purchase business assets as well, which could also lead to huge deduction in your taxable income. And when you're purchasing equipment and products and assets for your business, you can also, under section 179, you can actually write off a percentage of the depreciation of said equipment, assets, etc. that you've purchased for your business. This is also the time to make sure that your business is properly protected, review to make sure that your business insurance is up to date and it is working for your business, and also prepare and document the business insurance so that you can deduct that expense on your tax as well. If you are self-employed, you might be able to deduct the cost of your health insurance up to 100%. This also includes health insurance, not just for yourself, but for your dependents, spouse, certain family members. Lastly, we have Q4, October to December. This is where you're doing the final year-end maneuvers. This is where you accelerate expenses to defer income. When you defer income, it's basically waiting for the new year, waiting until after December 31st to receive the income, to receive the check, to receive the payment for whatever. You defer the income. Accelerate the expenses, which just means that you don't defer the expense. Don't allow the expense to push over into the new year. You want to take care of that expense right now, pay all of those bills, the business expenses. This is the time to pay down all of the expenses and whatever account payables that the business has. Now is the time for you to pay all your account payables. So pay all your expenses to accelerate your expenses. Pay your rent, your utility bills, everything business expense related. You're trying to pay all of that right now. All your accounts payables, pay them all off. Account receivables, you want to try to push that into the new year. Try to delay sending invoices. If you have a home office, make sure you're maximizing your home office deduction. By implementing these year-round tax saving strategy plans, you turn tax season from stressful into an amazing financial growth tool where you are prepared, knowledgeable, and ready for tax season, and it's not stressful, you're not confused, you're not running around last minute trying to get everything in order because you've spent the whole year keeping everything in order and planning for tax season, and you've maximized all your deductions and stayed on top of everything. Thank you guys so much for watching. I hope this was refreshing to you. Part 2 is going to be posted as well, but I think this video is getting a little bit too long, so I'm just going to cut it down right here. Thank you guys so much for watching. I hope this blesses you. Do go ahead and watch part 2. So that is the year-round tax saving plan that all business owners, entrepreneurs alike need to be utilizing to make sure that they minimize their tax bill and maximize their deductions, so that they are turning tax season into an amazing time in which they're fully prepared, and it's just, taxes are a financial tool. Get ahead of the game, move forward, and not be so stressed out. I hope it blesses somebody. Have a good night. Well, you have a blessed one. All right, bye. I'll see you on the next video. Toodaloo.